Hello and welcome to Startup Street. I'm Arundhati Ramanan and with me, Shruti Mishra. These are the top headlines from the startup space. In an email to employees, BNPL startup Zest Money says it will be winding down operations and will let go of its remaining 150 employees. The move comes after the Goldman Sachs-backed firm's founders resigned as they failed to raise funding and failed acquisition talks with PhonePe.
Not just Zest Money, teen-centered neobanking platform Crore will also wind up its operations this month, says N-Tracker. Adds that the shutdown is an outcome of RBI's direction to PPI issuers to stop UPI in a co-branding arrangement. The firm informed its users of the shutdown via an in-app message.
The sleep company raises 184 crore rupees in Series C funding round from existing investors Premji Invest and Fireside Ventures. The valuation of the startup has doubled since the last fundraising in October 2022.
Ola Electric has slashed its sales goals for 2023 to 2025 by more than half and delayed its target of achieving profits by a year. The firm expects to record 300,000 e-scooter sales in the ongoing fiscal year to March 2024, two-thirds lower than the earlier goal of 882,000 as per Reuters.
Investment firm Sense AI launches a $25 million fund which will invest in Indian artificial intelligence startups over the next 3.5 years. Sense AI found the plans to invest in 18 to 20 AI-first startups.
Swiggy appoints former Diageo India CEO Anand Kripalu on its board as an independent director and also names him as a chairperson. The appointment comes after Swiggy had also appointed 3 independent directors ahead of its planned IPO in 2024.
Unidentified governments are surveilling smartphone users via their apps, pushing notifications, a US senator warned, saying foreign officials were demanding the data from Google and Apple. Those were the headlines that we're tracking for you this evening. StrideOne has acquired a strategic stake in electric vehicle tech startup MoEVing. The deal will help StrideOne enter the last-mile EV financing sector. Besides acquiring MoEVing's finance tech platform, StrideOne will provide capital for its overall business as part of the first phase of the deal. Joining us now to discuss this further are Ishpreet Gandhi, founder Stride Ventures and StrideOne, and Vikash Mishra, founder and CEO MoEVing, as well as my colleague Shruti. Gentlemen, thank you so much for joining us on Startup Street today. Ishpreet, let me start with you. StrideOne has picked up a strategic stake in MoEVing. What made you bet big on the company, and what does this strategic stake entail at this point?
Sure. Thanks for inviting us on the show, Arundhati and Shruti. You know that Stride synonymously stand for being the largest startup financing player under the brand. And what we've realized is, if you recall our previous discussion, that EV has become a very important sector in new age capacity for the disruption it's making. And we had been investing in this sector for past 12 to 18 months. In fact, we've invested close to 300 crores already as Stride with the EV and clean tech, within the EV and clean tech umbrella. And moving from a perspective of strategic fit, what we realized was that they have been in this business for 3 years, and every business in EV space, whether it's the mobility, CapEx on the OEM side or battery management, requires a very high degree of finance. And we've been supporting that finance. But if the real void is coming on the last mile, so while the companies are getting funded and they require debt on the balance sheet, the real inflection point is how do you enable finance across the ecosystem, which StrideOne does. So from that perspective, the 3-year track record of MoEVing presented us a lot of data in order to make sure that we can build a very nice underwriting practice of StrideOne, because we really wanted to foray into e-financing, and we found it as an opportune fit in order to make sure that there can be a collaboration between both of us.
All right. Thanks, Ishpreet, for taking us through that. Vikash, coming quickly to you, if you could take us to MoEVing's offerings, you've got solutions on the demand side as well as financing solutions on the supply side. If you could elaborate on those and the kind of impact you now hope to make with StrideOne's backing.
Yeah, thanks, Auntie. So we provide full stack solutions to our corporate customers who are looking to switch to clean electric mobility solutions, and is a need because they want to reduce the cost and they also want to save carbon emissions. So we provide full stack solutions to all the big brands, global brands and the Indian brand, to switch to electric mobility. What we provide is the electric vehicle, the driver, and the charging it So that has really helped in terms of corporates moving to electric mobility. And with the help of StrideOne backing now, we can scale up to 15,000 vehicles very easily. In the next 3 to 5 years, we plan to acquire 100 plus corporate customers. And every year, we are adding 20 plus customers to our portfolio. So all the growth that is required, and the sector has a huge potential, and financing is a big challenge in the sector. With the StrideOne, we hope that it not only solves the financing of moving, but also the ecosystem financing, whether it's the asset financing, whether it's the driver financing, the charging financing, all the financing requirements can be met. And all the corporates who are willing to switch to electric mobility to save cost and abate carbon emissions, we would be very happy to provide the solutions to them.
Right. So those are the targets that you set for yourself. Ishpreet, since we're running out of time, in 30 seconds, if you could tell us, StrideOne is going to take out the entire fintech operations at Moving. So what are the kind of targets you now hope to achieve? How will you help Moving scale its business?
Sure. So actually, we plan to achieve 1,000 crore financing book in the next 12 to 18 months. We've already identified large portion of the fleet to be financed to Moving, as well as some of the other operators. We've been the first lender to a lot of other companies, including Battery Smart, Loham, Blue Smart, right? So we have been quite active in this space, and the entire infrastructure is developed on the basis of ensuring that the asset value, the driver underwriting practice, the battery residual value, all of that infrastructure of tech is what will help us deploy capital over a period of next 12 to 18 months with 1,000 crore target. That's what we have in mind, Arundhati.
All right. So you're looking to deploy 1,000 crore rupees in the next 12 to 18 months, Ishpreet. Vikash, this is Shruti coming back to you. If you could talk to us about the revenue picture, how much are you currently clocking and what are the targets post this collaboration? If you could talk to us about the revenue split between the supply and demand side of the business.
Yeah. Currently, we are making about 40 crores annual revenue rate. And first milestone is to hit 100 crore revenue rate by May, June next year. So that's our first target. And once we reach 15,000 vehicles, then we can definitely increase our revenue to $100 million revenue. Our large revenue component comes from the corporate customers, whether they are from the e-commerce companies, but we are also expanding to other than e-commerce companies as well. So we are expanding our footprint to lubricants company. We are targeting FMCG companies now. We have started doing EV with footwear companies, cloud kitchens. So our portfolio of customers will increase. Our footprint from 16 cities will increase to 30 cities. Our fleet size will increase. And we will be able to reach $100 million in the next 3 to 5 years. That's our revenue projection. And large part of the revenue will come from the corporate customers in the B2B segment who are looking for shifting to clean electric vehicles for their delivery purpose.
All right, Ishpreet, Vikash, we're completely out of time, but thank you so much for joining us on Startup Street today.
Thank you.
Thanks, Ananti. Thanks, Shruti.
Thank you. All right, moving on. India is the world's second most sleep-deprived country after Japan, according to various reports. A startup founded in Mumbai about 4 years ago is attempting to change this by disrupting the mattress industry. CNBC-TV18's Kiran Khatri spoke to the founders of this startup. Let's find out who they are.
What is the name of your startup?
The Sleep Company.
In one sentence, describe what your startup does.
Comfort tech brand, revolutionizing the way people sleep and sit.
What are the products that you make?
So we've got our own revolutionary patented smart grid technology. We make comfort products spanning across smart grid mattresses, world's first smart grid office chairs, and smart recliner beds.
We hear that you've raised, fresh funding. How much is that? And who are the investors?
So we've raised 184 crores in our Series C funding from our existing investors, Premji Invest and Fireside Ventures. This is at more than a 2x valuation of our last round, which happened in October of 2022.
And what do you plan to do with the funds that you've raised?
So we currently have 60 experience centers across 20 cities in India. We plan to take that up to 100 by March of this year and about 200 by March of next year. Second thing is that we continuously keep focusing on innovation, so constantly innovate new categories, helping people, helping the way people sleep and sit. And the third is obviously investing in brand building.
How are your mattresses different from the regular memory foam that people use?
We don't use memory foam. We are against memory foam, right? I don't think it's the right material to sleep on. We use something that we call smart grid, which is our patented technology in our mattresses, right? And that smart grid, there are two unique benefits of smart grid versus, let's say, a memory foam or a foam mattress, right? I think the first is, our body is not a straight line. So it's not that we need a soft mattress or we need a firm mattress. We need a mattress that is soft on our curvatures, our head, our shoulder, our hips, and firm under our spine. And that's what Smart Grid does. It's the only technology that can adapt and change the softness as per your body parts. Second, I think one problem that a lot of consumers complain about is mattresses get hot. Smart Grid has a lot of air channels which ensure that you don't sleep hot.
What is your revenue target for this fiscal, and when do you expect to be profitable?
So this year, we expect to close at about 350 crores of net revenue, which is more than 2.6 times of what we did last year. We've seen great unit economics playing out, and we are on the path to profitability, and we think that we will hit profitability next year.
What would you like your company to achieve in the next 5 years?
We want to become world's best comfort tech brand. We want to change the way people sleep and sit. We want to make them sleep better. We want to make them sit better, right? I think that's what vision is, right? But from a financial milestone perspective, if I look at, we're looking at, doing around 1,000 crore net sales in the next 2 to 3 years and, becoming a public listed company.
Since you are an omni-channel business, how important do you think it is to have a social media presence or an online presence when it comes to marketing and sales, especially in a market like India?
I think at the sleep company, because maybe we started as a digital first brand, that's our DNA. Today also, though, 50% of our business comes from, let's say, our experience centers, but 90% of our spends or media mix is digital. We use digital not just from obviously reaching our consumers, but huge chunk of our product pipeline is dictated by what our consumers want. We listen to our consumers. For example, we started with mattresses as first product with our tech. Consumers started telling us, that, when I buy a mattress, I need pillows as well. Can you make better pillows? So we put the tech in the pillows, right? Then our consumers started saying that, I'm working from home, but, I don't like my chair. Can you do something about it? We launched Smart Grid chairs. And same is for our recliner beds.
The best compliment since you've started off?
Yeah, so this is a little early in our journey when we were just starting out, and we were getting reviews on Amazon and on our website. And there was one customer who said that this is the best cure for insomnia, and that completely made our day. So I think that would probably be one of the best compliments that we've received.
Have you had any aha moment, and if you can recollect what it was?
I think our aha moment was the time when we really cracked this whole smart grid as a product, right? And as Priyanka mentioned earlier, it was 1.5 years of journey where we experimented with more than 100 different materials. And, there was a time when we didn't know which way it's going to go. And the day I think we cracked the product was probably something which I can call it as an aha moment.
On that note, it is time for us to head into a short break. But coming up, we go deep dive into Fireside Ventures, a special report about all their investments and their journey on the other side.
Welcome back to Startup Street. Let's get you some buzzing news coming in from the startup world. Ola Electric has slashed its sales targets for 2023 to 2025 ahead of its planned debut on Dalal Street. Now, as per a report cited by Reuters, it has also delayed its target of achieving profits by a year. The report says that Ola Electric's revenue target for this fiscal year is now around $591 million. This is about 60% lower than earlier goal of $1.5 billion. Sources cited in the report claimed that the targets were lowered because the government reduced incentives for electric scooters.
Once valued at $450 million, buy now, pay later startup Zest Money will be shutting down operations amid regulatory uncertainties. The startup has failed to revive its business under a new management. On the 5th of December, the management informed employees in a town hall that it would be winding down operations and letting go of the remaining 150 employees. It will retail a skeletal legal and finance team to complete the process. The firm has promised employees with 2 months of severance payment and outplacement support.
And from one startup that's shutting shop to another, teen-focused neobanking platform Akudo ceasing operations this month, according to an in-app notification sent to its users. Entracker reported that the decision comes after Reserve Bank of India prohibited the use of Unified Payments Interface in a co-branding arrangement. Now, the message sent to users said that they should withdraw their funds and wallet balance as soon as possible. Remember, the firm had raised $4.2 million in 2021.
India's leading mobile payments platform Paytm is all set to expand its credit distribution business in partnership with large banks and NBFCs. The company aims to focus on higher ticket personal and merchant loans to lower risk and high creditworthy customers. This expansion comes as a result of Paytm's robust portfolio performance and the widespread acceptance of its loan distribution services.
Well, that was a quick wrap of all the startup news that came in today. Moving on, Fireside Ventures is on the path to identifying and nurturing brands that could one day take on rival giants like Unilever, Dabur, Britannia and others in the consumer goods industry. Mamaearth's IPO put the spotlight on the VC who continues to reap benefits from its 29 crore rupees investment in the beauty and personal care brand. Here's a special report on what's aiding Fireside in creating a legacy in the D2C space.
I met Varun on the phone, really liked what he was telling me. This was even before the business had started.
That's Kanwaljit Singh of Fireside Ventures that made riches on Mamaearth's IPO. Let's rewind a little. In 2016-17, Fireside Ventures became the first investor to join Mamaearth's cap table with an initial investment of 30 lakhs. The VC's founder and managing partner Kanwaljit Singh oversaw the transaction. What's interesting is, at the time, Fireside was yet to close its maiden fund. Singh, a former executive at India's largest consumer company HUL, crafted his investing lens at Helion Venture Partners, zooming in on emerging consumer brands. In fact, he led the first institutional round in ID Foods, showcasing his keen eye for promising opportunities in India's growing consumer market. Following his departure from Helion Venture Partners, Kanwaljit Singh founded Fireside Ventures with a clear mission: to support and invest in emerging consumer brands with the potential to disrupt and challenge established multi-million-dollar conglomerates. And his biggest winner turned out to be Mamaearth, which went on to list on the stock exchanges on November 7, 2023. The consumer-focused venture capital firm made a return of 18 times, recouping 547 crore rupees over an investment of 29 crore rupees in Mamaearth, of which 258 crore rupees came through the IPO.
I mean, it's been, like I was saying, a very surreal journey with not just Mamaearth, but just the experience of the whole new age brand space that we chose to participate in the last 7-8 years. And yes, I met Varun on the phone, really liked what he was telling me. This was even before the business had started. And then I met Varun and Ghazal in Delhi and just, fell in love with them and fell in love with the idea. And really, that's how the journey started with them.
The VC has now further divested a 1.9% stake in the beauty and personal care's parent, Honasa Consumer. Nearly 63 lakh shares exchanged hands in the block deal, and the transaction is valued at approximately 238 crore rupees. In many ways, the journey of Mamaearth and Fireside mirrored India's D2C boom. With With the third largest shopper base globally, India is now home to more than 800 D2C brands, as per KPMG. Riding on this wave, Fireside Ventures went on to invest in 40-plus companies that are leveraging digital infrastructure and social community to serve online-first millennials and Gen Z. Across its 3 funds totaling rupees 3,000 crore, Fireside has backed the likes of Licious, Bombay Shaving Company, Wakefit, Sleepy Owl, Boss Skincare, among others.
We realized that digital infrastructure was actually disrupting the business of brands. And that was the intuition of getting in at that point of time. I think that was a point of time decision which really worked for us. Then COVID came, it accelerated the adoption of digital brands. And now the whole omni-channel, ONDC, quick commerce. So there are so many levers of growth. But fundamentally, the consumers are becoming smarter. They're looking for more choices. They want more interesting brands to consume. And just the infrastructure is playing into that, positive demand. And that really excites us about the future.
To date, Fireside has exited from 12 startups. It saw an exit from Quick24 after it was acquired by Big Basket, and also partially exited Boat after it raised $100 million from an affiliate of Warburg Pincus. The growing D2C wave also gave birth to the trend of large FMCG companies investing in online-first brands. ITC acquiring stake in Fireside Ventures portfolio company Yoga Bar this year is an example.
Perennial favorite for us is always going to be FMCG. So, food and beverages and personal care. We believe that will continue to be one of the big areas of focus.
As the narrative of India's direct-to-consumer sector continues to unfold, Fireside Ventures is adapting its investment philosophy to align with evolving market dynamics. From its $225 million third fund, Fireside is looking to invest in 25 to 30 startups. Notably, the firm is placing a significant emphasis on consumer healthcare space, reflecting a forward-looking approach to emerging trends and opportunities.
We have started investing now also in the consumer health and consumer healthcare space. And we are finding that as a great extension of our overall thesis of looking at consumer brands. And we certainly see ourselves doubling down on that. We have already done several investments in the areas like probiotics, diabetes, fertility, and so on and so forth. And besides that, we are also seeing a lot of disruption happening in the home space. We also believe that the growth of the next decade will also be driven largely by what we are calling India 2.
D2C startups have raised over $2.5 billion since 2014, according to KPMG. This upward trajectory is projected to continue, with the market anticipated to reach a staggering $100 billion by 2025, making it a ripe investing ground for global venture capital firms. With Akhil Vishwanath, this is Aishwarya Anand for CNBC-TV18.
That's the story of Fireside Ventures. But with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.